Hey guys, this is Rob, Colorado Mortgage Coach. June episode of the Monthly Mortgage Playbook and our Market Watch. Yesterday, June 14th, the Federal Reserve Board raised interest rates by 0.75%. That's the money on a short-term interest rate loan between two banks. So it doesn't directly affect mortgage interest rates, but it does kind of give us a precursor or at least some warnings that we're going to see continual mortgage interest rates rise. So if you're looking back at the beginning of the year, as you got through February, we were in the threes, we went up into the fours. Now we're firmly in the range of the sixes. What that means to you as a consumer is a few things. Number one, the Federal Reserve Board has made it very clear that they're going to continue to raise interest rates in order to try to curb inflation. And what that really means to you is what they're saying is, hey, we're going to raise interest rates so the demand for spending goes down a little bit, so that the competition or the demand for additional goods can ease a little bit so prices can maintain or level out. That same thing is going to be shown in the housing market when it comes to the increase in mortgage rates has shown us over the last 30 days or so an increase in availability in properties and available opportunities for purchase. A few months ago, we had crazy competitive sales, amazing overbidding. That's starting to ease. Now, from a perspective of that, we don't think from anything that I've read, and my crystal ball is no better than anybody else's, but what we've seen is that they think that we're going to start really just leveling out on an appreciation standpoint. So over the last few years, we've had crazy skyrocketing appreciation, and it's benefited homeowners, but obviously it's made someone looking to purchase a property a little bit skittish because the values continue to go up, prices continue to go up. But what this means for us is that we're not going to, as homeowners, not going to eat away or lose the equity as we saw in the 06, 07 type situation, but just start seeing an evening of the playing field. Now, from a money perspective, from a mortgage, so let's say we have to refinance, let's say we have a situation that we need to make a change monetarily with our mortgage, because that concept is out there that we're going to raise interest rates a few more times, it may benefit you to start that process now as opposed to wait until a later date. We don't know what market's going to be in 6 months, 9 months. So if we can continue and maintain an interest rate as low as possible in order to get you something, you still want to do it. I will tell you that it sounds miserable, but when I got in the business originally, if you had something that started with an 8, you were super excited. And we've just had an amazing run as far as rates are concerned. But remember that mortgage rates are always going to be lower than competitive consumer rates when it comes to your credit cards or other type of installment loans. So it gives us an opportunity that if you need to utilize that equity in your house for home improvement, for debt consolidation, know that it's still a benefit to you. Remember, it's also normally a tax deductible situation versus what you have when it comes to installment or normal revolving credit. So that's just a June market watch. And if you have any questions, feel free to call me. We can talk about things and see if your situation is in need of a little bit of a change or how we can improve your situation. So again, this is the Colorado Mortgage Coach, and I look forward to speaking to you soon. Thank you.